Hi, good afternoon. So today we are going to discuss a very important piece of price action called capping of price. So what is capping of price? Let us understand with this market structure and this diagram in front of us. So here we have price moving up consistently in a direction, and it creates something called a rally based rally, which we already know. And this also could be a pole and a flag and a pole in terms of traditional technical analysis. So essentially, we have some form of basing over here. And then price makes the final move up. It comes back strongly here, breaks this flag structure or this rally based rally, and then again makes a reversal to come back to pick up the sell orders from the original area and then reverse. So this is called capping of price. So often what happens is that you would see that when a stock has been in a consistent uptrend and institutions have been riding this uptrend, there would come a point in time when the price becomes so high that institutions want to take their profits, or they feel that price is now overvalued and it's time to exit. So when they intend to reverse this price, you will often see this kind of price structure. I will show you with some examples on important stocks how the structures has played out in the past. So here is the example explanation once again for this. So price is moving up. It finally makes a rally, some base and a rally. Important thing to note here is that this rally based rally would be on its own, which means that it is not touching any previous zones. It is just standing on its own, and then price would reverse, break through this or engulf this particular rally based rally or this particular flag. Then it would reverse back in the original direction, go up, pick up the original set of sell orders from here, and then reverse and continue on its way down. This is called capping of price. So this particular zone is called a price cap. So we can see this in most time frames. On the daily time frame or the higher time frames, we often see this when price is about to make a reversal or it is at its top. So price cap is a very powerful reversal signal on higher time frames, which indicates that institutions might just be start to book their profits and the stock is about to reverse often. In lower time frames, this can also be traded very profitably. But in lower time frames, since market is fractal in nature, we have the mini and the micro trends going on there. So they need not be market tops as such, but it could be an end of a mini or a micro uptrend or downtrend. So even in lower time frames like the 5 minute, the 15 minute, 1 hour, or as low as the 1 minute, which I will show you an example in Nifty itself. This kind of price cap structure is often formed before a strong reversal. So let's see the example of Maruti first. So as you can see here that Maruti was in a strong uptrend throughout the year 2016-2017, and towards the end of 2017 it made its final high over here, and price was already very much near 10,000. It was considered to be overvalued by institutions and they wanted to book their profits and exit from this stock. So here you can see that right before it started reversing, it formed a cap in price. You see price was going up, up, up. If I zoom in, you can see this final move up, then a flag over here. Right, this entire flagging area, or a rally, base rally, which we call in our language. Then price comes down, breaks this rally-based rally or this flag area, creating this cap in price. Since we all know that institutions don't get fill in one go, so before breaking it, it went and picked up some orders, sell orders from here, got some fill from here. But since this was one or more large institutions trading, and they needed more orders to be filled, so they took up prices again back in there, you can see, and through a nice uptrend, which was giving an impression to the retailers that price may again continue in an uptrend and continue in its journey to more highs. But finally, you see the price cap itself, prices began to drop and institutions were taking out their profits after this huge rally in price. So the price cap area itself became the market top for Maruti. There was also an indication on its weekly chart. If you were noticing back then, I was. See how price is fractal in nature. Even on the weekly chart, after a massive rally in price finally made a rally-based rally, which was also coinciding with the basing area on the daily chart. Then it made the final dash up. Then institutions wanted to book profits around this 10,000 whole number. Price reversed, came back in, broke this rally-based rally or this flag area. So you can see that a rally-based rally in a higher time frame could also be a rally-based rally or a flag area in the lower time frame. So it comes back here, again goes back up to the cap area, price cap, and then drops from there. So next, I'm going to show you on lower time frames how it works. So here I have lined up some examples for you. So first, we're going to see PEL, Piramal Enterprises Limited. Let's go to the 15-minute chart. This is near 31st of May, this example. Yes. So as I said, in lower time frames, price makes mini trends, micro trends. So it need not be at market tops for that that stock or script. It could be within its own micro mini trend. So here you can see that price was making a mini uptrend with higher highs and higher lows. Then it makes a final rally, base, another rally. This is a nice pole, a flag and a pole again. Price comes down here, breaks this. Rally, base rally. Then it sort of comes here. Yeah, very near to it, to the price cap area, and drops. So essentially this, let me draw it more. So where did the price drop from? The zone was starting from here actually. this entire area, right? So it goes back in and then drops from there. You can see the drop in price from there. Let's still take 15-minute. Yes, so September 3rd. Right, you can see this, a strong move up. Price makes a rally, a base, and a rally. Then it makes a gap over here where it is going to reverse. Right. So you have rally base drop, nice drop. Breaking this rally base rally. Price goes back in to pick up the set of pending orders which it left here, and then it drops. See the drop. Another example in M&M, 2nd August. Okay, take this 2nd August. So here price was making a nice micro uptrend. Then it made a nice rally, base rally. 2 candle basing. Price comes back in, moves up without breaking it. You can see it did not break here. It goes back to the cap of the price. Here is where the drop started. Right, then goes back in, makes this is called a level near a level, or level on top of level, or level below level, two adjoining levels together, and then drops, breaks the zone by few passive, again goes back, but it fails to go back to the supply zone over here and over here. So we had two set of zones sitting here stacked together, one next to the other. Right. Then price goes down. This can often happen at times that you might not get an immediate entry. After many days, price goes back in, and this is what happened. You can see over here. After many days, price goes back in. There were set of pending orders sitting there. Just touches it, and then it drops from there because of that price cap pending orders there. So next we have Kotak, 9 July. Yes, so this is on the opposite side. So we had prices coming down nicely in a micro downtrend. We had this drop base drop, or this bearish flag. Right? Then price goes up, price sort of stops here, reverses from here, breaks this drop base drop, this flag, creating this tiny price gap area, a bullish price gap area with pending orders sitting here. This one again price goes up, keeps on going up. After many days, look at this. Price comes back to this price cap area and then it makes a dash. See the force of pending orders over here. This day price actually closed inside here. Next day morning it gapped up open here and then started to rally. So this is one interesting one. Like I said before, price is fractal, as above, so below. So whatever you will see on the monthly, weekly, daily charts, you can even witness the same phenomena happening on the lowest of time frame like the 1 minute. Since Nifty is a highly liquid script, it is India's the index, so it's highly traded. So the 1 minute chart of Nifty is very liquid as well. So this is Nifty's 1 minute chart. Okay, so this happened on 18 September 1:15. So September 19. September 18, 1:15, yes. So this is it. So you can see here, the price was nicely moving up in an uptrend. It made a final rally, a single base candle and a rally. This could be flagging in lower time frames. Now you can ask, what is the lower time frame time 1 minute? Well, price also has big charts, but we are not much concerned about it. We'll only look at this rally-based rally, right? Price moves up and then comes back, drops here. You can even see that this is also a rally-based rally, and price just sort of broke this entire zone. Either way, it's fine. It made a cap in price here. And then, see, price just comes back in a nice uptrend. Touches that price cap area over here. You can see how it touched over here. And then look at how price just fell from there. Just tanked from there. So this is price cap on Nifty's 1 minute chart. So this is the last example I'm about to show you. This is again on BPCL's daily price top. So here you can see that BPCL was in a nice uptrend. It was rallying, and finally, when it was about to make a top, what it did. You can see this, it made a nice rally, base, multiple basing candle, sort of a flag, and then a nice pull up, again a rally-based rally. And price was about to reverse from here. It came back here, formed this nice supply zone here, the price cap supply zone. It came back here. Engulfed or broke this rally-based rally, this flag. Since the institutions did not get its complete fill over here, it went back up to pick up the pending orders, got its fill, and then took price down. Price moved down, and this became the top of the chart. You can see how price has been falling from there, this particular price cap. So hope you enjoyed this very important price pattern called cap in price. Please, if you would like to understand it once again, I would suggest you go back to the start of this video and watch this video one more time or even twice if you feel so. And please subscribe, because a lot of important concepts is going to come up in the new upcoming videos. And I'm going to share a lot of analysis of different stocks as well in future videos. And this will continue on a regular basis. So please subscribe to get the latest update to this channel. Thank you very much for watching. Wishing you a very good journey in learning and trading. Thank you.